Hello everyone, Monte here, market analyst at IG, coming at you from IG's very own office in Dubai in the UAE, and just in time because let's face it, we have got a significant number of items this week. Rarely gets bigger than this. I'm not just talking about US CPI today at 5:30 p.m. Dubai time, but also when it comes to central bank decisions. Chief amongst them, the US Federal Reserve, with their announcement expected tomorrow at 11 p.m. Now, the thing about when it comes to CPI is last time around, let's face it, when it comes to the October readings that were released on November 10, it get a very, very sizable risk-related mood that kind of set the appetite up until now. We had a 3% plus gain when it comes to Dow 30 or Wall Street on IG's trading platform here. And since then, the moves have been relatively oscillatory to the upside for that. So the hopes are that if we can get a positive surprise where inflation edges lower, maybe, just maybe, we'll get ourselves another leg higher when it comes to risk-related appetite. And we want to go ahead and take a look at some of the specifics when it comes to this. The expectations are that the year-on-year reading is going to drop to 7.3%, that we're going to get month-on-month readings both overall and at its core when we take away food and energy of growth of 0.3% month-on-month. And what we don't want to see is the producer price surprise, negative surprise that we saw on Friday, where we did get a month-on-month was worse than expected. I mean, when it comes to pricing, anything higher or above expectations is considered worse than expected, especially when it comes to its core at 0.4%. And when I say worse than expected, higher in this current phase, this inflationary phase where central banks are actively trying to reduce inflation rates. But overall, when it comes to producer prices, even consumer prices, it's moving in the right direction in terms of what the U.S. Central Bank wants to see, and that is that they don't want to see these big 1 or 1.1% gains that we saw earlier, month-on-month gains that we saw earlier this year. And one of the positive things that we have seen as of late is that inflation expectations consumers has been dropping. So 12-month when it comes to U of M, and with the 12-month 3-year as well as the 5-year in yesterday's New York Fed survey. So these are considered positives when it comes to inflation expectations. We've got to make sure that CPI itself now actually starts to fall in line and gets ourselves a little bit further away from 4 or 5 times the central bank's 2% target and closer or in line with some of their estimates, which yes will take some time, but we do want to at least move in the right direction. So November 10, the October's reading on November 10, that was considered to be data point number 1. Today, 5:30 p.m., that's expected to be data point number 2. Hopes are that it's going to be hopefully lighter or lower than expected. The other item to know, of course, is that that's when it comes to CPI. But last time around, we didn't get the Fed's decision afterwards. It was before that. And that means that this time around, whatever happens with CPI, it's going to give a chance for the Fed to take note and therefore react accordingly. But overall, tomorrow, 11 p.m. our time, that's when the decision is going to come out. The expectation is that we're going to be looking at a 50 basis point increase. In fact, when it comes to the U.S. as well as key European central banks, the expectations are it's going to be a week of 50. They're all going to be raising their key rates by 50 basis points. And when it comes to the Fed, it's a bit lower than what we've been used to seeing as of late, those successive 75 basis point rate hikes. But that means that with 50 basis points, we are going to be looking at an increase from what was 3.75 to 4% for their federal funds rate. And it's not just about the rate hike, though. It's also, or how much they're going to raise it. It's also a matter of projections. And I'm not just talking about the dot plot. I know that the markets are pricing that second half of next year, the Fed's going to start reducing rates. The Fed has been trying to push back against that and say, no, we're going to be holding or higher for longer. It's also their updates when it comes to the economy, given that there have been rising recessionary fears. So their expectation of where they see the economy going, where they see pricing going, where they see unemployment, that's also going to be noted by market participants. Of course, Chairman Powell, he's going to be speaking his press conference at 11:30 p.m. And I think a part of it, the tone, is going to matter in terms of what's going to happen with CPI, because we're still somewhat in this phase where whenever there's this big risk on or risk-related move, a lot of times central bank officials have been coming out and trying to sort of temper the move a little bit. They don't want it to turn into another move where speculators start to get in, for example, start buying up commodities, which then fuels further inflationary pressures down the line. Now, that's when it comes to the U.S. And of course, U.S. CPI, as well as the Fed, it's not just going to impact the dollar, it's not just going to impact U.S. appetite. When it comes to something that large, it's going to impact pretty much anything and everything that it has to touch, or anything remotely related to risk appetite and the U.S. dollar. But afterwards, when looking at Europe more closely, this is going to be on Thursday. We're going to get the Swiss National Bank, Bank of England, European Central Bank. We're going to focus on 2 of them today. And when it comes to the Bank of England, expectations are they're also going to be raising theirs bank rate by 50 basis points to 3.5%. Is it going to be a split decision? Most likely, you're going to probably get some members that are saying, hold on a second. We have been hearing from them openly, some members saying, well, we want to, let's wait a little bit. Let's not get too excited. Let's not raise it. Let's give some more time for us to feel the impact of these rate hikes. And inflation is going to be released tomorrow on Wednesday. It's expected to show that it's going to be at or near 11% year on year. So that's something you're going to have to note for those of you trading the pound prior to the BOE's decision on Thursday. And when it comes to the European Central Bank, they're in a very similar position in the sense that, yeah, okay, inflation is not 11%, but it is a lot higher than that of the US, and it's around 10%. So that means that they are also in a tough situation, and that means that sizable rate hikes are going to be difficult in the current phase. Same time, though, you've got different members of the central bank. Some of them want a more hawkish move. Others saying, no, let's be a little more dovish and be more cautious in the current phase. And I think that if they do go with the 50 basis point rate hike, the expectation is that, well, they're going to have to give the hawks something. And we are also expecting updates when it comes to unwinding their balance sheets. So that's something to keep in mind in the current phase. But overall, to go back to the platform and to take a look at the markets. I mean, we're just looking at the Dow, but generally speaking, when it comes to key indices globally, they have been enjoying some decent gains ever since the last report. So it's going to be very important that what happens tomorrow, what happens today, 5:30 p.m. for CPI, and what happens tomorrow in terms of US Fed, it is going to dictate risk appetite moving forward, at least for the next month. So that's about it from my end. I thank all of you so much for joining me here at IG. Wishing you guys good luck and happy ticks.